Hello, family. Good morning. This is my post-trade commentary for the GBPJPY this week, to this date specifically being 5th of April 2025. I just want to show you how we're able to call over 500 pips trade on GBPJPY during the week. And I know a lot of you cannot even imagine that it's possible to call this type of trade, which is very easy to do once you know what you're doing and you have a trading edge. You're going to be able to do these things. So for posterity and for clarity, I just want to show you from the mentorship community. If you check clearly, this is the Elite Traders mentorship group, and this was on April 3rd after we had our live session. This is the video for the live session we had. Then I posted the video, so you can see clearly that this was the live session. This was the live session where I was analyzing some pairs, and I remember clearly I specifically analyzed the GBPJPY. After we were done analyzing the GBPJPY, you see that after we analyzed the GBPJPY, then just after some minutes, I still sent an update saying GBPJPY delivering as called during the live session, over 100 pips delivered. If you took the trade, send your screenshots. This was the the post trade update, and of course a lot of people took the trade. If you check the comments, you would see clearly a lot of guys saying amazing sniper entry, sexiest trade ever. I closed mine out. I was happy with what I got. You see that mine is still open. So a lot of students really made money from this trade when we had this analysis on Wednesday, just on Wednesday. Okay, so if you're looking for this kind of opportunities, where you need to be is you need to be in the Elite Traders program, the mentorship community. So just check the link on the description of the video. Make sure you signed up for the Forex program or for the NASDAQ and the US 30 course, the sniper strategy here. Any of these two courses you sign up for, you have access to the mentorship community. You see that, and the course is very affordable. We're even giving it on a discount of $900 or $99 here, $99 here. The volatility in this course is only $50, but you don't have access to any mentorship community. With just this course, it's just the course you're having access to, even though the course also delivers. Then if you are wise enough, I recommend you take the all-in-one package. It's going to give you access to all the courses for an affordable price of $200, still for a discount. Instead of paying $250 to buy them each, you rather pay $200 and get access to all the courses and still have access to the mentorship community. You should see who your mentors are. You should go through the page, get to see testimonials, reviews from students, withdrawals, proof of withdrawal from students, and all that. I recommend that you should clearly take your time to go through, and then you can sign up. The link is on the description of the video, elitetradersprogram.com. all right, this is not the other website you are used to. We had to upgrade and we migrated to this very domain, Elite Traders Program. So make sure the spelling is correct, or just use the link in the description of the video and get started with me and Solomon King. So let's just take a recap on how we're able to call over 500 pip trade on the GBPJPY. I actually took only about 300 pips, but if you held this trade, we called about 500 pip trade on the GBPJPY. So we're going to start all over, taking out all the markups, and let's go to the daily time frame, because everything starts from the higher time frame. The higher time frame, of course, is the main driver of liquidity. I remember clearly during one of our live session, I think last week, I called the GBPJPY bearish, especially because we've seen previously price action created shift of market structure bearish. Right at this level, we had price action created a bearish market structure. We changed from bullish to bearish, right? And we've also seen this guy created a failure swing. So let's mark the most recent structural shift on the daily time frame after we had failure swing, that is price action failing to take out the previous high here and creating shift of structure, giving us that sell momentum price traded back into the bearish mitigation, sold again, and started to trade bullishly. All right, so I remember I clearly called even the bullish buy into this specific level, the sell side imbalance, the buy side inefficiency, and the bearish order block right at the mitigation block. So we were looking at price action, taking out the relative equal high right there and trading into finding resistance at that inefficiency above the fair value gap above the high. If you guys have been keen followers of my teachings, you would hear me say all the times that we need to see price action. If you want to know where the drawn liquidity is, identify the highs and the fair value gaps above it, or the lows and the fair value gaps below it. That is where the drawn liquidity is residing. So on the daily time frame, we've seen price traded into this level, and the previous week we saw price created shift of structure on the 1 hour time frame, more so confirming that we are in a bearish market. So we've seen the 1 hour time frame created that displacement somewhere around here. We had shift of structure, price traded back into the bearish breakup. Why is it a breakup? Because we've seen the 1 hour first of all taking out that high. It took out the high right there, sweep of liquidity above the high, and created displacement to the downside, leading to a shift of structure, bearish or change of market character. Then we took a sell as price traded into the bearish order block here, more specifically also the inverted fair value by the left, price action violating that fair value gap and later trading into it to find resistance. So this is more like support turned resistance in terms of fair value gap. We took a sell right there and price delivered into the drawn liquidity, the relative equal lows here, and that was what happened. Then we called the buy, this very buy specifically, we even called this buy specifically. I remember we called the buy on the 15 minutes time frame. Why did we call that buy? On Monday, on Tuesday, price delivered the buy was because we've seen price action created some level of relative lows here, and just below that low we've seen price created fair value gap and a bullish order block. Okay, this is also breakup. Price took out the low before the shift of structure, left that low untraded into, and on Tuesday price traded into that area. You see that, and we took a buy on the GBPJPY, and price delivered into Wednesday. You see that price delivered right there into the buy side liquidity pool right at this level. So initially we wanted to sell after price took out that buy side liquidity pool and traded into the fair value gap above it, except that there was a news, that Trump news event that happened on that Wednesday evening spiked up price action a little higher, took out the buy side liquidity pools there, and just retested the bearish order block right here on the 15 minutes time frame. So, and again also the time was totally not right for us to be in a trade, because this was after the New York session, trading hour, and it was already getting into PM sessions. In GMT plus 1 was around 7:30 p.m. Nigerian time, so I already knew that that was not the time for us to trade. And in the New York time was getting to around the 1 p.m. New York Standard Time. That's not the time for you to be in any trade. Okay, so we left it. So the following day, on Thursday, price action again. You know what it did on Thursday? Price action created a very sweet power of 3 concept. What was it? We see the GBPJPY consolidated right here. Consolidated right here. Alright, we've seen this guy consolidated from the Asian session, then during the London Open. London Open, remember, is the 2 a.m. New York Standard Time. During the London Open, price action manipulated retail, inducing the retail traders to take buys. The retail traders were induced because they are seeing this as a breakout. They are seeing this as a breakout. Price has broken out of that high because we've had relative equal highs, relative equal lows, and we broke the high. And when you are using power of 3 concept, most times the first move is a manipulative move to induce retail towards the opposite side of the market, towards the opposite side of things. And so we were on that live call doing analysis when I cited that we have an IOFED, institutional order flow entry drill, right there. You see that? The IOFED entry strategy was what we used to call over 500 pips. What was it for us here? We had fair value gap with an old low in between. See that? Fair value gap with an old low in between. Price action traded into that area, and immediately I saw that, I knew that was a sell for us. So all we needed was just a little bit of confirmatory entry, and the confirmatory signature for us was we identify a swing high formed after price traded into that fair value, because there are two ways to take entries like this. You take an entry right there with stop loss above the fair value gap there, or you wait for price action to form swing high, and as price takes out the low of the third candle here, that is a sell for you. Just right there, that is a sell, and your stop loss above the high of the third candle. Okay, so for us, we took that sell right at that area. I remember clearly saying that, man, this sell is already ripe, and we're just going to be looking for draw on liquidity. Where's the next draw on liquidity? All right, so you just go to the 1 hour time frame and you're identifying where's the next potential draw on liquidity. So on the 1 hour, we're already looking for the relative lows below. You see that old low there. It's one place to look for. See the low there and the low there. All the lows right there, which we even called as diagonal liquidity during the session. We looked at all the lows there as low resistance liquidity run, price action consecutively ascending, creating lows. All right, that's going to make retail think this is trend line, but unfortunately we are looking at those areas as draws on liquidity. So we targeted the last low there as the draw on liquidity. The price action delivered between Thursday and on Friday. During the NFP, price also reached out for that draw on liquidity. So if you measure from that entry into the draws on liquidity, you would see that price delivered over 500 pips. 500 pips price delivered just between 2 trading days, Thursdays and Friday. This is the magic of trading in the direction of the higher time frame. That's why we cannot overemphasize the need to focus on the higher time frame, because the higher time frame is where the magic is. If you're busy looking for lower time frames, not concentrating on what the higher time frame reading is saying, you're not going to get big trade moves like this that could change your life forever. Imagine what one standard lot will be on a 500 pip move. That's $5,000. Imagine what 10 lot size will be on a 500 pip move. That's like $50,000. See what the magic can do? You see where the magic is? It is focusing on identifying big moves. You can only do that if you know what you are doing. Not guess what? If you know what you're doing. So my friends, you've seen me showed you guys how we call this trade from analysis to execution to post-trade analysis right at the mentorship, and this is what every trader needs to be looking for. Mentorship community that's going to give you updates on what is about to happen, when it's happening, and after it has happened. It's called pre-trade analysis, during the trade, and post-trade analysis. That's what you're looking for. Just check the link on the description of the video. Sign up for Elite Traders Mentorship Program. Very affordable for beginners, everybody. To get into the mentorship, that's what you need. If you need a one-on-one mentorship program, you need an accountability coaching, you need me to sign up on your MT5 investor password or MT4 investor password and monitor your trades, monitor how you're trading, guide you clearly, access to my private, specific, accurate trading models that are, of course, very profitable. There are many testimonials. I don't have the time to show you. Yesterday, one of my students, took a trade for the first time, $181, and he made over 1,500 euro. This guy is based in Dubai, and look at how this mentorship is. Look at how the chat between the guy and myself. So he took a trade and sent me, because on the one-on-one mentorship you have access to my private DM. Once you take a trade, you can let me know and I will guide you. So I say do break even and let it run. Today is NFP, don't forget. Next trade he took again, he said he's out, he went again. Okay, how much have you made today? He said he's made $1,500. Life account, he said yes. What was the deposit? The deposit, he said, was $81, and he withdrew $500. So he sent me a voice note saying that This was the first time he has ever made such an amount. I was really happy for him. These are some of the benefits you get on the one-on-one mentorship. If you want to join me on the one-on-one mentorship, make sure you check the link also on the description of the video and just send a DM, and I'm going to give you a special discount just today for one-on-one mentorship students. My friends, you are the one delaying yourself from experiencing all the potentials that you could, because every human has a potential. You can only experience it if you let yourself, give yourself an opportunity to experience all the goodness of life. I hope that today's session is very insightful. Make sure you like the video, subscribe to my YouTube channel so you can always come back for more insightful, educating video content. And don't forget also to drop a comment. Let me know what you think. Let me know what you like me record in the next video. Until next time, I wish you good luck, good trading.